Um, as I said, I was looking at the Aussie Swiss simply because, as I said, there's a nice cross on the 15. It was also looking to cross on the hour as well. But you could also look at the dollar Swiss here. We've had a cross on the 15. It tells us that, as I said, it's just, if you've missed it, the move from, say, the reversal point here that we have here and here, when they do cross, it tells us that there is an opportunity that this move is likely to continue, because that's what we have to try and establish. You either get in early. Reversals they're more, you have to take a little bit more risk in the sense that it may pull against you. You can see here there was a reversal here, but then look, the dollar then sort of kinked up before it came back down again. So if you were looking at getting at this point, reversal here and here, or here and here, it's just something you have to take on board, and it comes down to how comfortable you are, seeing maybe a position pull against you. Because you've done your analysis, you've looked at your other time frames, you say, yeah, it's just a minor pullback, it is going to carry on in the direction, I am going to get this reversal. Or you've missed it completely because you come in at a different time, different sessions. This is a 24-hour market, but it's 3 separate, very distinct trading sessions. And unless you have some sort of automated system, most traders are discretionary. They trade the different sessions to suit their time zone. You're always going to miss something. A move may be underway, and you may want to join that move. And as I said, when you do get the cross on this particular indicator, it's a great way to sort of at least go and investigate that particular pair and think, yeah, I know I've missed that. There's been a bit of looks like that is going to carry on higher, and I might be able to take something from it. Back here, I've actually got the matrix which ranks the pairs, which are the sort of moving most strongly. We can see here at the moment we've got the dollar yen. The values on this indicator are actually quite interesting. They are very interesting because we're looking at a refinement of this indicator, because what we want to try and establish at the moment, this is 80, but earlier on when I think the CAD yen was up here, it was at 180. That tells us, it gives us an indication of the strength of the move that's already been in the particular pair. Now 80 is what we want to trace. We want to benchmark. Is it high for this time frame? Is it medium? Or is it low? So that's the first thing, and we're looking at a way of being able to put that information on the indicator. What's also interesting is to look at the other end of the indicator, because there's an imbalance we see here. We've got 78.80, so we know there's quite a strong move going on in dollar yen, but not so strong in New Zealand dollar. It's only at 26, so there is move, but it's a little bit sort of sluggish, as it were. If we look at the 15-minute, I've actually got I've got the array indicator up here as well. On the 15-minute array, you can kind of benchmark it with the matrix on the hour. This indicator is more, if you were to put this on the hourly chart here, you can see here, you get a totally different picture with regard to the indicators. That's because the way the indicator has been set up. Those of you who have our tools will know if you want to compare it, it's much more like the trend monitor. It's a much more measured way of ranking the pairs. But if you take this down to the 15-minute, you can actually see they correspond more with what's going on, the 15-minute with what's going on the hour, which is why I said the 15-minute and the hour actually work very, very well. Right, and I've actually got it. What have we got here? Very, very quickly, I'm just going to go to the Aussie Swiss, because I was looking at it earlier. Let me see and answer what's happening here. Right, I was looking at the Aussie Swiss, and the time frames I've got here, I've actually got a Renko chart, I've got a 3-minute, I've got a 12-minute, and I've got an hourly chart. And First of all, the hourly chart tells me, gives me a very important piece of information about this chart in general and about this pair. It's pretty range bound at the moment. There is movement. It's not huge movement. It's below what we call the volume point of control. There's a bit of a bearish feel to this chart, which reflects what we could see on the indicator. In other words, the Swiss is going up and the Aussie is going down, reflecting what we can see in the indices, which have, as I said, come off slightly. So that's telling me that on the hourly chart. Looking down at the 12-minute, I can see again it's gone back to the volume point of control. This is the little move higher, this is the move lower, and we're back in a kind of congestion. We've just had London open, so there's no firm direction yet, one way or the other. On the 3-minute chart, we've had a trend, we've had a move down. Now we've got an attempt to rise back to the volume point of control. We've got a 2-bar reversal here, but look at that move. One of the things we talk about in the education program is trends they're not all equal in the sense of how they move. This trend here, if we move over to the left-hand side, it's fairly measured. There's not a lot of spikes to the candles. It kind of went higher. Then we had some volatility come in the move lower, as we can see here. A lot of wicks to the candle. So it's what we call a trend with volatility. Now, the actual point of whether we're going to take any move in this pair really depends on what we see on the Renko. This is the Renko chart. This is a non-time based chart. And I just want to see what the value is. This is set at the ATR. So each box size is 4.8 pips. So 4.8 pips have to go through the market before the brick is closed off. But what we actually see is we can see the trend moving lower, but can you see it's reflecting it's holding because the trend monitor is holding. The trend dots are more or less red. It keeps trying to go into the grey, but it keeps going down. And what this tells you, it gives you the key levels where if you were thinking of rejoining, this is what you have to wait for. You now have to wait. We've got the cross on the CSIs. We know this move is in play, as it were, but the levels are displayed for you. So it's 0.6086 to the downside, and we've got this top side level of 0.6144. What you're seeing here is exactly the same as you can see on other pairs as well. You bring in all the other elements of chart analysis, VPA analysis, of which support and resistance is one. The indicators are telling us these are the moves that are going on at the moment in the pair, in the various currencies and currency pairs. You go to the chart, you see how that is reflected immediately, and you can see it's got a bearish feel to it, but it's sideways and there's a little bit of volatility. And really, if this were the pair you were thinking of joining, you would have to wait. You would have to be a little bit more patient and wait to see whether these support and resistance levels are then taken out. And we know they're going sideways because we're kind of very close to the volume point of control on the time charts. In fact, we're very close to it on the 3-minute, we're around it on the 12, and we're also with it on the hourly chart. So maybe, you know, what we see on the CSIs, on the matrix, on the array, this is at the moment, this is possibly not a pair. You just have to be a little bit patient. And it brings me back to my one other thing I want to say is how you approach this market. Do you simply look at all 28 pairs, look at look at the charts if you've got the indicators, and just choose find a trading opportunity in whatever pair is or pairs are going to offer that opportunity? Or do you say, actually, I'm going to focus on maybe 2 or 3 pairs, and I'm just going to wait until they show some sign of movement, that something is likely to happen in those pairs, and really basically ignore what is going on in the others. That decision is a personal one, but it also depends on your time zone, because not all the pairs move equally in all the time zones. I've mentioned this before. You can go and check this information out over at investing.com. It's based on their volatility. You know, it is, as I said, it's a 24-hour market, but you know, London Open, we're sport for choice. It's going to be the euro, it's going to be the pound, it's going to be the dollar, it's going to be the Aussie. Maybe in Asia, it's obviously going to be the yen. It really depends, but you can check this information out. So you could make yourself a little put a little portfolio together and say, well, I'm only going to do 3, 4, 5 pairs, or you can do it based on what the currency pairs, how they reflect what else is going on in other sections of the market. So maybe you take a yen pair, you take a cross pair, you take a majors, but you only focus on them and you ignore, you think, oh, there's lots going on in another pair. Well, you know, so what? Get to know the pairs in your portfolio, the way you kind of get to know stocks, and you know what makes them move, what items of fundamental news impacts them the most, what are the geopolitical events that impact them, etc., etc. And once you get to look at their charts, you kind of get a feel for what is likely to move them. You know, do they spend a lot of time range bound? Do they spend a lot of time in congestion? In which case, you know, you're going to have to go down to the to non-time based charts. It really does depend. Some of them don't move very fast. Some of them are much more volatile. Again, there's a lot of decisions to make as a trader. All of this is actually explained in our education program, as I know those of you who are on the program know and understand. But those of you who perhaps aren't aware of it, it really is worth checking out, and I'll put up the link to it later. Right, I'm going to stop there. I'm going to pass over to David because I know he's been looking at some of the yen pairs, and we'll see what's been going on.